Let's now focus on the primary markets. We've got a new IPO opening today. This is Quick Heal. You would have heard about Quick Heal because this is a software company that provides products for software security, be it for your computers or be it for your mobiles. And to talk to us about this, we are joined by Mr. Sanjay Kakkar, MD and CTO of Quick Heal Technologies. The IPO is open from Feb 8th to Feb 10th, and the price band is between 311 and 321 rupees a share. Mr. Kakkar, thank you so much for speaking with us at NDTV Profit. I think you're looking to raise about 250 crore rupees from this IPO. Can you tell us what will you do with this money? Does it go to the company? What's the plan?
So out of the complete offerings around, like we have the IPO is for 450 crores, and out of that 250 crores is like fresh issue, and rest of them is for through the dilution, so offer for sale. So out of these 250 crores, we will be using our funds over the 3 years for marketing and branding. The half of them, like around 110 crores, and 40 crores for building up our labs for enhancing them products for very large enterprises, and some of the fundings will be used for the infrastructure, and the rest will be for general purpose.
All right. Your company Quick Heal is into security solutions so far, and at this point in time, there's no listed peer to compare your performance with. But there are other companies like Semantics, McAfee that are in this market. How do you view the competition coming through? And while in the past your performance has been very steady and strong, can you keep up with this performance going ahead?
Yeah, so we are, ours is a unique company to get listed, in the sense, even though in IT we are a pure product company where security is our main focus domain, and we have around say 87% coming up from retail sales of our products, and in retail sale we do see very less competition in domestic market. It's most of the competitions that you listed we are facing them only in enterprise, and we do see good traction because we have just released our enterprise products 3 years back in last 3 years, and we do see that these products will definitely help us grow and give us a good leverage over the next coming years.
Okay, so if you're facing the competition in enterprise, what makes you so secure that you will not face this kind of competition in the retail business as well? I believe you have 30% market share. Could that come down?
Yeah. And that will definitely, we will be able to maintain that, and I think we'll be able to increase our market share further as well, because as we increase our penetration across the country through our offices that we have across the country in different cities actually.
What I'm trying to understand is that, the funds that you're raising basically for renovation of your offices, sales and marketing, how does it help grow your business? If you were investing a lot in R&D, I would understand. And the fact that you're a pure play securities products company, doesn't that open you to risk? Are you looking at R&D to perhaps enhance product offerings as well?
Yeah, so as I said, it's right, like 40 crores out of that will be used in enhancing our products, in terms of enhancing our labs to make these products scalable to the very large enterprise. As I said, we entered the enterprise space in last 3-4 years, and the amount that we have kept aside for branding and marketing is to make sure that we take this retail enterprise brand to the next level. So the brands that we have, the Quick Heal, which is
all right, so Mr. Kakkar was explaining what they were planning to do with the money that they're spending into the R&D, which is about 42 crore rupees. While Quick Heal is a brand well known in the retail market space, they have a market share of 30%. They have recently come up with the enterprise offering 3 years ago. Mr. Kakkar, sorry we lost you there. You were talking about your enterprise brand. That is where you face the maximum competition. And this is the area that you want to scale up. Now, I want to try and understand from you, how do the margins in the enterprise business differ from the retail business where you have a strong foothold? And what are the targets that you have for the enterprise business development?
Yeah, in terms of margins, the enterprise and retail are pretty much similar. There's not much difference, I'll say. The margins are still in the high 90s, I'll say, and that's where we had been doing proving it over the years. And for enterprise, as you rightly said, we have entered the segment and we have launched this new brand, but the focus had been SME segment, which is growing very fast for us. And I see a very good traction coming out of this enterprise segment. The further revenues will definitely enhance our top line in through the enterprise sales actually.
But what is the kind of growth rate? I want to understand what is the why the focus on the enterprise business. Is the growth rate expected to be better? Will the revenue mix change significantly, say in the next 3 to 5 years?
Yeah, what our observation has been is that even though in enterprise most of the competition is in very large enterprise space, we are more focused towards SME segment, where I am saying small and medium business is more of an unaddressed market that we have coming across, and that's where we see potential growth happening for us in that segment. And our product offerings are very well placed, in the sense well poised to capture those markets. So as we did for retail, we are a market leader. We will definitely be able to achieve the same space for enterprise in next coming 3-4 years. I cannot share the targets, maybe because of this SEBI restrictions, I'll say. Yeah.
Right. What is, can you share your targets on the number of subscribers you want to add in the next 2 years, be it both retail and enterprise?
Yeah, I can say for retail we have been adding subscribers at more than 22 to roughly 22 to 25%, and in enterprise we have been adding the licenses in the range of around 40% per year, and I do see that this will be maintained for next 3-4 years, the growth rate, I'll say. Yeah.
All right, but you know, the concern amongst investors is that the pricing at which this IPO is coming at. Now, there are no listed peers to compare with, but if you do a comparison with a Symantec, it's a large international player. Earnings on a margin basis are similar, though the scale is much higher. Valuations are much cheaper than yours. Do you think your IPO will have that kind of appetite, given that markets are also jittery?
See, I'd like to add here in terms of, we for us, when we are listing in India, ours is a unique proposition where we are in a IT product domain and a consumer flavor to it. Being a technology product and in a consumer space is definitely a very high growth, and which we have demonstrated over the years, 5 years now till now. And our presence being in India, which is growing at a very fast space, I see a very good traction for our products in the coming future. Like the government initiatives like Digital India and even the smart cities is definitely going to add up to this. So we do feel that we are rightly poised to grab the more market in Indian market, and it's much of the Indian market is still unaddressed, and we being present in every city of India as like presenting our products and reaching out to channels is the plus point for us to grab that market, I'll say.
All right, Mr. Kakkar, thank you so much for speaking with us at NDTV Profit, and all the best for your IPO. We will speak with you on listing day to see how the performance is on day one. Thank you so much for being with us on NDTV Profit. Yeah.